Welcome back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange. Joining us now is Derek Macpherson, CEO of West Point Gold. Hello to you, Derek. Thanks so much for joining us today. Look, the last time we had you on, it looked like gold had sort of, gone off the radar a little bit just because we'd seen those record highs and it pulled back a bit. But we are creeping back up towards those records again. Just talk us through the price action and what's driving that right now.
Well, price action's back up to, as you said, the 52-week highs, or sorry, not even 52-week highs, the all-time highs, and it's pushing, gold's up 65% year to date. So obviously a very strong performer overall. And what's driving it is liquidity. I think as much as the rate cut was sort of telegraphed that the Fed announced last week, I think that's continued to provide positive momentum for the gold price. And you have globally, you have significant deficit spending on all the governments. And so that liquidity is continuing to go into the system. And that's benefiting hard assets. I'm looking at the graphic you have here on the side. And while gold's doing really well, but so are silver and copper and other commodities as well.
Yeah, obviously we've seen the dollar weakness very much helping gold catch a bid this year. That is set to continue into 2026. We've seen this aggressive central bank buying. Obviously, China's been a big contributor of that. And as you mentioned, some of these sort of global concerns around debts and deficits coming from certain governments. Are those likely to be those sorts of trends that continue to drive this higher into the new year?
Well, I think you kind of outline those key factors, right? You have central government buying or central bank buying, which I think is going to continue. There's still the weaponization of the SWIFT system with respect to that. I think is still something that central banks are going to be cognizant of and continue to de-dollarize at the slow pace that they are doing that. And so that's going to provide buying support for gold. The other thing is that you have this liquidity. I don't see any governments slowing down their spending anytime soon. Virtually all governments are in heavy deficit spending, and so that liquidity and that deficit spending, including the U.S., and so you're seeing that. I think that's going to continue to push gold higher as well. And so I think when you have those two things, those factors are still there. What could be the red flag out there, or what could be the thing that kind of gives us a bit of a pullback? I think it might be a global pullback in the economy if we get that liquidity dump. But even that, I think between the central banks and governments, they're really trying to protect the economy against that, protect the markets against that. And so I really think it's kind of the train's going to kind of keep on rolling. Are we going to see another 65% again? I'm not sure, but I think the gold price is going to continue to be strong. And I think one of the other things that we're going to see is that I think the investment case is going to shift from where we had seen it, which was kind of the commodity, which was up until probably middle of this year. That was the place to be, and I think it's actually shifting more towards the gold equities.
Right, yeah. Obviously we've seen that as well as far as some of the outperformance in some of these mining companies. Up over 100%. Also, for some key names at least. What about who's buying gold? When you talk about the retail investor, there's been a big conversation about how, maybe the market would like to see more participation on that front. Is that something that you're seeing?
Yeah, well, I think we are, right? I think we kind of had almost like a stealth bull market in gold up, late 2023 and early 2024, because what you had were, as we talked about at the beginning, those central bank buyers. And so those Eastern and mostly Eastern, so, China, India, governments like that. And so they're not going to step in and buy gold equities, right? And they're not going to step in and buy the GLD, which is kind of the preferred way for retail to play gold. And so because of that, but that shifted middle of this year. And all of a sudden now not only are you seeing the gold price continue to perform strongly, but you're also, because they're getting those incremental buyers, but you're also seeing the equity start performing, the GLD, and the GLDs finally started adding tons, which is a big difference. So that momentum is going to continue. Now, I guess the bull market or the buyers are shifting from, they were east and now they're kind of east and west, which I think is giving it further momentum. The other key thing on gold is, or on precious metals that you can look at is that silver tends to be the poor man's gold, for lack of a better description. And I think the run in silver that we've seen recently is a good sign that you're seeing retail participation in the precious metals trade.
Right. I just want to unpack that a little bit further, because you sort of took the words out of my mouth with this sort of commodities bull market that we're seeing sort of playing out here. At least that's the thinking into 2026, is that that sort of starts with gold. What do you see as far as some of the trickle down effects here with, silver hitting record highs over on the LME?
Yeah, I think you're going to. I think you'll see silver's the obvious one. Typically, what you see in a commodities bull market, a big cycle, gold will run first, and then things follow behind it. Silver is one of the first ones, and so we're seeing that already, starting with silver, and then that actually generally trickles down after that, right? You start to see, other commodities. The factors that drive gold ultimately drive those other commodities. So you see things like copper, platinum, palladium, things like that to start to see to catch a bid as well.
Derek, it's always great to talk to you and get an update on the gold market. Thank you so much for joining me today. Really appreciate your time. That's Derek Macpherson there of West Point Gold.